Welcome back to the channel, everyone. Today I want to talk about what's next for AMC. First, I want to recap what's happened during the week. The new changes in Ortex, new shares being issued, the new marketing strategy from Adam Aaron, and more. I also want to talk about what's next for the AMC stock price. Has the short squeeze already started? Maybe we're mid-squeeze right now. Maybe it hasn't even begun, or maybe it's all over. Obviously, I'm not a financial advisor, so I can't give you an exact price as to when the short squeeze is going to finish, but I'm going to give you some indicators to hopefully give you a bit of an idea. If you apes are new to the channel, or you've seen some of my other videos but you haven't subscribed yet, then be sure to subscribe to the channel and ding that notification bell. But for now, stay tuned and let's make some money. Now I want to dive straight in with the key information. So, let's start from the top and recap what's been happening over the last week. On Ortex, the shares on loan have been increasing significantly all week, now with over 138 million shares on loan and approximately 92 million shares being shorted with a short interest of 18.5%, and that's not including any of the synthetic shorts. Even with the massive price movements on Wednesday and Thursday, the shares on loan were still increasing significantly by millions of shares each day. Ortex recently tweeted saying that over the last few days, the shorts have been losing $2 to $3 billion a day, plus interest. Yep, you heard that right, 2 to 3 billion. And the interest cost to short AMC stock is around 11% per year at the moment. But what about the number of shares that are currently in issue? Well, it was recently corrected by Ortex down from around 550 million to around 493 million, as the April share issue had been double counted by Standard & Poor's. It was then increased to around 511 million after shares were issued to Mudrick Capital and a new share issue was made. There's also a share recount going on right as we speak. Obviously, we know how Mudrick shares ended. They sold those shares the same day for a small profit, missing out on hundreds and hundreds of millions of dollars. Those shares that were sold to Mudrick didn't get cancelled after they sold them, they just sold them on to the general public, like you and I. There was some speculation that the 11 million shares issued on Thursday was just an old share issue and that FUD was being spread, but it was confirmed that the 11 million shares were new shares that were being issued, and those shares were actually issued the same day on Thursday, around $50 per share, raising around $600 million for AMC. If we take a look at how these 500 million shares are split, around 75% of the total issued shares are held by us apes, which is really interesting actually, because a few days ago on my stream, this figure was around 80%. So it shows that at the moment, actually the suits are trying to buy into AMC to capitalise on some of our gains. However, we the apes still control the majority of the shares, which is great. We're still pressurising those shorts into being liquidated and sending the AMC stock price higher and higher. We also know that Adam Aaron recently introduced a new marketing strategy, giving investors some free popcorn and a special communication channel. Obviously it's not that much, popcorn is like $10, but it just brings more and more hype and more news attention to the AMC stock. This is obviously going to cause more and more people to hear about the AMC movement and buy into the stock. But how can we avoid being caught right at the very top? But first, if you apes are new to AMC and you haven't yet bought in, then be sure to check out the links down in the description below to Webull and Free Trade, where you can currently get up to 2 free shares worth up to $1,850 with Webull and a free share worth up to £200 with Free Trade in the UK. So has the short squeeze already started? Are we squeezing now, or is it already over? Well, a short squeeze occurs when the shorts get liquidated. When somebody shorts a stock, they borrow it from somebody that owns the stock and sell it with the intention of buying it back later. At that later date, they then buy back the stock and cover for either a profit or a loss. For example, if you sell the stock here and buy it back here, it's the same as buying the stock here and selling the stock here. So you've obviously made all of that profit. Therefore, the shorting of a stock is a selling event and the buying back of that stock is a buying event. But it's important to remember that if a short is very heavily underwater on their short position, especially if it's their leveraged short position, they could be forced by the broker or the clearinghouse or the market maker to forcibly cover and buy back those shares. And as I just said, that forced covering is a buying event, and therefore when a short gets liquidated, they're forced to buy back the stock, sending the price higher. A lot of people don't quite understand and don't quite see how a $100 AMC is possible, or a $500 AMC, or a $1,000 AMC, because they think, well, who's going to buy the shares at $500 per share? No one would, that's just crazy. I think it's important to remember that while you or I might not necessarily buy AMC at $500 per share, new apes that are just getting into the AMC movement will be. And most importantly, the shorts that are getting liquidated are going to be forced to buy back those AMC shares at $500 a share. When you're getting liquidated, you don't really have a say in the matter. So, has the short squeeze already started? Well, Ortex has been saying that over the last few days, the number of shares shorted has been going up and not down. And therefore, funds aren't yet being liquidated and forced to buy back their short positions, as the shorts have been going up and not down. So therefore, no, the short squeeze hasn't yet started. But I think it's also very, very important to remember that while Ortex update their website every few hours, it's not technically live data. Because of T+2, funds don't actually have to report their trades for 2 days after they've made them. Therefore, the funds could have covered their short position today or even yesterday. But we won't find out about that until Monday or Tuesday when they report the trades. And therefore, if you're waiting to see the shorts figure starting to go down, then you're technically 2 days late and you may have already missed the very top of the short squeeze. And most importantly, the downside of a trade comes 10 times faster than the upside of a trade. Therefore, it's going to be very, very difficult to time the exact perfect top of the short squeeze. But again, I think it's important to remember that that isn't really the most important thing. Obviously, in hindsight, it's very easy to say, oh, I wish I sold right at that very top tick. But when you're in the moment, you don't know if it's the very top or if it's going to go higher or if it's going to start going lower. You just react instinctively. Therefore, you could sit there watching Ortex and try and sell off your entire position as soon as the shorts figure starts to fall or hit zero. Or alternatively, you could just lock in profit as we go up and as we have been going up over the last few days. Maybe you've sold some shares at $50. Maybe some at $60 and some at $70, and you plan to sell some more at $80, $90 and $100. Doing that and locking in profit progressively on the way up is always much, much better than holding right through the entire top of the short squeeze and all the way back down to $10 or $20 a share. I think it's also very, very important to remember that you can combine this strategy with a dip buying strategy or a pullback buying strategy. Say, for example, on Wednesday, you sold some of your shares at $60. You could have then bought some back at $50. Say you sold some of your shares at $70. You could have then bought some back on Thursday at only $40. This is a great way to not only lock in profit, but also not significantly reduce your share holdings and also supporting us apes by buying the dip. But how else can you tell when to sell? Well, another option is to look at the volume. Back in January, we had 400 million shares traded, 400 million, 1.2 billion, 600 million, 600 million, and so on. However, now that we're in May and June time, we've had 700 million, 600 million, 750 million, but we haven't yet had 1.2 billion shares traded. Maybe if the volume got back up to that 1 billion plus share level, maybe that would be a good time to sell. There's no real way to apply fundamental analysis or technical analysis to the AMC price at the moment because it's trading solely off of social arbitrage, and therefore you need to use social signals instead, like volume or short interest data, even the number of tweets per hour. Now, if you want to hear about news like this before I make a video and you want to become part of my team where we talk about stocks before they blow up, then be sure to check out the link in the description to the Patreon and the private Discord. And as always guys, if you enjoyed this video, be sure to check out some of my others. Alternatively, subscribe to the channel and ding the notification bell. But for now, cheers.